Okay, guys, welcome back to the Failed Breakdown channel. It's Friday, January the 9th, 2026. Got a few different trades to go over today after yesterday's kind of slow, choppy session with the failed breakdown of 69.50. We've had a few more cleaner setups today, so a bit more of interest to talk through. I've got IMMW with me again today, and as ever, we're doing our best to describe the method taught by Adam Mancini, but just a disclaimer: neither of us are experts, and we do make mistakes. So take everything we say with a pinch of salt, and always defer to Adam and his newsletter for the full breakdown, which will come later on. Okay, let's get into the charts. We're going to discuss three trades. I don't think either of us took this first one, which was the 69.64 reclaim. That a few different entry options in there from the evening and in the pre-market. And then there was a 69.76 reclaim, which I took shortly after the open, and then the 69.65 failed breakdown that happened a little bit after that, which IM took. So we kind of get different perspectives from those two trades. I'm not going to worry too much about the context stuff. We looked at that in the pre-market. Just dragging the chart in here. So I've got the 4 hour on the left and the 15-minute on the right. So let's just quickly touch on the 69.64. So zooming in a bit on the chart here, just looking at the close of action yesterday. Adam had noted that down as his kind of strength reclaim level. And so if you were quick and you read the newsletter as soon as it came out, you maybe could have gotten that level to level move there straight off of the close. So entering after 4 o'clock in that kind of in that window between 4 and 4:30. But obviously 64 was a major resistance level all day yesterday. Tagged into it multiple times, kept dipping off it, but always returning. And then nice little final dip in the afternoon, held the 50 level, and then came back up, tagged it one last time right before the close, and then pushed through with momentum. I didn't take that one. Usually by the end of the day, I'm happy just to turn the charts off and let my brain kind of recover and reset, but there was definitely a trade in there. You didn't take that one, right?
No, I
No,
did not take that one either.
no. But that was an option there for a quick level to level move. That was probably the biggest move of the day happening after hours, after quite a brutal session. If you were staring at the charts all day, that was a difficult one. But if you'd gotten in early, like we talked about, the 69.50 failed breakdown and were holding runners all day, perfect strategy for that type of market. Don't stress. You've got your level to level move out, and you don't need to worry about the all of this chop in here, trying to find a trade or search for something that isn't there. But in the overnight session, then it continued to be an important level, tagging it multiple. First of all, we broke back through it on the evening session, and then set about the process of accepting it from below again. And this is kind of that typical of what you see with overnight reclaim, where it's just taking multiple hours or the entire evening session and keeps on tagging it from below. So we've got 1, 2, 3, 4 tags from below before eventually dipping. And the nice thing about these dips is none of them tested the evening low down at, what was that, 54-ish. None of them even threatened that, so I think you could have taken this impulse back up through with some level of confidence there, even for a relatively low volatility reclaim. I was considering it at this point, right when I woke up. Bear in mind, these times are central down here, so this was right around 6 o'clock. But just with all my routine in the morning and kids and all that stuff, I declined it. But there was another entry in there with a bit of type 2 acceptance where we pushed up through and then returned to the level. So I kind of had an alert set for 65.50, and that triggered, I think, while I was busy doing something else in the morning. But when I woke up, price was up here in the low 70s. I didn't want to chase it up there, but there was that type 2 dip back to the level for another possible entry. So I think that's enough on that one. Moving on, then we had what was it? Was it non-farm payroll?
Yeah, that
Or
was at
unemployment
8:30
claims or
a.m.
something, some news, whatever. Some number they're lying about, I'm sure. Anyway, that's enough politics. But we pushed up through and then were able to reclaim this important 76 level. So that was important from Tuesday and Wednesday. So it's been a very significant level all week, really. We tagged it and put a huge dip off of it on Tuesday, then recovered it, kind of flagged there for a little bit before pushing up to the 85s, and then dipping into Wednesday, bouncing off of it 2 times here, another time here before breaking down. And then we'd already put in the start of acceptance yesterday with this run up to 72 and then tagging it perfectly off of the 64 reclaim after hours. So a very significant level here at 76. Wasn't part of the part of Adam's plan, but we did touch on it briefly in the pre-market plan, kind of identifying it as a lower quality because you're higher up there. The context isn't good, but still a level that can be traded as a level reclaim at that point. And for me, I wasn't in a runner at this point, so I was kind of keen to get a trade in. And what I liked here was the scary flush we had, and I've just dipped down to the 10-minute here. And what you can see here is just before the open, we started dipping right around 9 o'clock. So that was right after. Was that after the news came out about the tariffs?
Yeah, that
That was
was 10 a.m.
Wait,
when
that
they
was 10
announced
a.m.
that
Oh,
it
sorry,
wasn't
that
gonna
was later
happen.
on. So that was still pending. But you see the red bar I've got showing here. So that's the one indicator I have on this chart, really, which is the sort of scary or elevator down sell indicator, which just tells me that we're selling at a rate greater than 0.75 points a minute. So a decent flush through the 76 level. That's what caught my attention. And then the entry was fairly simple on this one. If I just flick to the other platform and look at the range chart over here. So looking back at this level, so you can see kind of the acceptance going on, and you can see my entries there as well. But we impulsed down through the level and then started returning to it with a bit of type 1 acceptance, return to it, dip again, and then impulse up through. Some good volume here at the bottom, and some anyone who follows Delta, like some of the signs on the Delta too, with a bit of a wick there, and then it's starting just to sort of move to the positive side. So that was my trade for the day. I took a level to level move out of that. My entry was a little bit higher than I would have liked at 78.75, and I took it up to 69.85 for a level to level move there. Being smaller size for me, my runner I trailed my runner out break even on that one because I didn't want to let it go green to red, and then we had that pending news event afterwards, and I was sort of expecting some volatility to come from that, which ultimately it would have trailed my runner out under the structural low there. So I was just interested in profit protection at that point, but that does leave me flat for the day now here. And then let's move on to the 64. So that's enough of the 76. You want to talk us through this one because you traded this one. I'm just moving back to kind of a
Yeah,
5-minute chart here.
Yeah, so this was the only thing I took today, and honestly, it looks like so far it's ended up being the nicest trade of the day as the runners here are still active and holding pretty strong. But you can see we actually had a nice shelf of lows here around 64, 65 area. We had a bounce here once at 6 a.m., a low there, and then we had another one at 7:30 a.m. So we kind of had a little bit of a two-touch shelf, as I like to say, sitting right there. So, that's kind of a prime area to watch for traps. And right around um, this was around, when did we lose this? Around 10:05. So just a little bit
Hmm.
after 10 o'clock. We started putting down a quick, mini elevator flush down,
Yeah.
and that's kind of when you're supposed to get excited, potentially about a failed breakdown triggering. So we lost it very quickly all the way down into 69.55, which was a nice support shelf from overnight. We actually had put in a couple of nice bounces there overnight, once at 2:30 a.m. and then once at just a little bit before 4 a.m., which actually was going to be another area to watch also potentially for a failed breakdown. So we kind of bounced right off of that
Yeah.
support and
That
then
that was
quickly reclaimed. Yep.
that was the London session low as well, which is something I track. I don't know, if it's just because
Yep.
I'm British or whatever, but we got like a micro flush of that level
Tim's
here.
like that's Tim's like it's my lows.
Yeah, it's the most important low.
um so we touched it real quick and then real quickly kind of got up to the 69.65 low to back test. Now, in terms of execution here, so right, we around 10:10 we go ahead and back test it. So now you're watching for, the obvious acceptance, and that's when you can enter. So I'm now eyeing this pretty heavily, looking for acceptance. And we don't really get any traditional acceptance here. I mean, if you really squint down in
Yeah,
on maybe a 1 minute
I'm
chart in
just
real
dropping down the time
time,
frames to try and find something, but I'm down to the
yeah,
two minute.
if you're
Um,
at the 1 minute, like I saw this, but like it was too quick and
yeah,
just not enough in my opinion. But we technically, you could say we hit 65 and then got down to 63. So it was like a quick, like just 2 point dip. But if you're watching this in real time, you really have to squint there. It's too fast and just not anything substantial in my opinion enough to really consider acceptance. So at this point you're really just waiting, right? You're waiting for price to show its hand. And we kind of just have a strong candle up all the way past the danger zone. So the next thing you know, 2 minutes later we're up at 69.72. So we've, at this point, we've cleared the danger zone. Acceptance in the traditional form hasn't happened yet. So this is kind of when you then turn your eye into NAP, right? The non-acceptance protocol, and you're kind of just waiting for price to see if it can hold above the danger zone for a few minutes. So I'm watching it at this point, and next thing you know, we are just climbing the ladder. It's 69.75, 69.76, and we're just kind of climbing. But again, you still want to be patient. You don't want to just rush in just because you see price rushing in. I think that's a mistake that, a lot of times, you can get affected by. And, years ago, I used to kind of be in that same boat. And I think, a lot of newer traders, when you see price run like that, you kind of just want to hop in on that momentum, thinking that this is it. But it's still good to wait that few extra minutes, right? I mean, price will still most likely give you an entry, and you don't want to get caught up in just rushing, because next thing you know, it could just be a hard trap and just flush back down. So I gave it a couple minutes. At this point, it got a little interesting because theoretically, when the you know NAP kind of timer in your head is kind of done. It's been a few minutes. We were kind of hovering around 74, 75, and we had a major level at 77. Now, the reason 77 was important was this was actually a shelf from earlier in the week, if you remember. This was a shelf that we actually lost. Um, what was this? This was on Wednesday, right? Yeah, this was Wednesday, and we had built out a shelf and had lost it. And so that's kind of what triggered the sell algorithm, right? Remember, algos trigger anytime you see a failure of a failed breakdown shelf. So we had that on Wednesday, and that's kind of what caused us to sell all the way down into 69.35 and get that sell into Thursday. So the recovery of that obviously would be substantial win for bulls, and we'd already kind of put in some acceptance on the higher time frames there in terms of back testing it a couple of times. So, there are two real opportunities in my opinion, to approach this. One, you could have just hopped in at 73, 74 and taken a trim at 77, or just wait for 77 to clear, take it right above there with that a little bit of a confluence, and then take it up for a level to level move. So personally, I decided just to wait for 77 to clear and then took it, just given how close we were. But you could have also just taken it a few points below at 74, 73, and just taken a trim at 77. So I think there's two ways to approach that one. I did take the entry above 77 personally, just opting for a higher entry at that point. Obviously, not ideal to take an entry 10 plus points above the failed breakdown level, but in this case, there was really no other way to play it. And you're kind of just waiting for price to show its hand. I was waiting for price to push down, sellers to react, but we didn't really get much of a reaction. So that just means that price is strong, buyers are strong, and you just hop in, even if it means a little higher. You should still be able to see a pretty good opportunity to see a level to level move higher, and that's what we ended up getting. And those runners are now active, and we've hit essentially all the targets for the day up until 7,000 at the highs.
Nice. So there was a little bit of type 2 acceptance around the 76 level as well there. I guess that's right when you were getting in. Was that something you were monitoring too?
Yeah, I was watching a little bit of that. I mean, at that point, though, I did already know that the failed breakdown was active because it had been a few minutes that we were hovering above 65. And to be honest, well above the danger zone, too. It wasn't just like, sometimes we'll have some trades or examples where prices may be hovering like a point, 2 points above the danger zone. And
Yeah,
it's kind of,
or poking
you're
its
kind of
nose
like,
down into it and
yeah,
like
it's kind of just chilling. But in this example, if you see, we were hovering like a good 5, 6 points above the danger zone, just chilling. So it was well past the danger zone, and it was holding for quite a bit of time. So that to me was giving some good confidence of that. We weren't even close to touching the danger zone after we cleared it. We were kind of hovering right above it. Again, the thing that does suck there is that you are getting a little bit of a higher entry off the lows, so your stop is much higher. So in this case for me, I just play it smaller size because of obviously the larger stop. And then secondly, as I mentioned on the pre-market stream today, it's Friday, and so Fridays automatically to me activate profit protection Fridays. So I just take that very, very seriously. And I've talked about this before, but a couple of things for me. One, you never want to have a good green week go red just on the last day of the week, right? You worked 4 hard days to ensure that you're profitable, and you never want to see that all go on the last day of the week. And then psychologically as well, Friday is the last day of the trading week. So the worst thing you want to do is, because this has happened to me in the past before, where you have a bad Friday trading, and now you're just sitting with your thoughts, for 2 days where there's no trading. Saturday, Sunday, you're just kind of sitting, and there's no real opportunity for you to get back in the game for a couple of days. And in the past, I have noticed that can take a big psychological hit. So I like to go into the break kind of. I almost treat, for those of you guys who are into sports or sports fans, I almost treat every week like it's a game, right? The game starts Sunday night, it ends Friday. So that to me, I treat it as one game. So I almost use the weekend as like a way to, the game's ended, I get a reset. So I never want to go into the new game or the new week feeling like I'm on a down, or feeling like, oh, I'm a little angry at what happened the past week. So I just like going into a new week kind of fully reset. So for me, I always prioritize profit protections. Even if that means like, hey, I'm gonna not make as much on a Friday, that's okay to me.
Yeah, that's a great way of looking at it, and that's the same for me. So I took that one trade of the 76, and then obviously being higher up, there's it's lower quality to begin with, and then the chance of the runner getting trailed out is higher. So my runner did trail out break even on that one, and I declined. I decided not to re-enter this 74. I mean, partly because it just happened so quickly, but I was content to wait for a lower entry if we were going to get that, or sit out on this 64, being one and done, taking some points and conserve that mental capital. Um, One thing I wanted to put you on the spot on, I marked on the chart. I know you can't see it, but the danger zone of the London low at the 56 level. Um, what do you think about that as another potential way of getting a lower entry? So we've got this clear sort of three touch self here at 56 from the overnight and the London session, and then we get that micro flush under it by a point, and then
I
looking
don't even know.
for the
Was it even a point technically? It
was it
was. I
low
guess it was.
50, or was it three quarters of the point? 55.75 I've
Yeah.
got there, and then
It's always tough with those extreme. I'm not the biggest fan of flushes under a point personally. I obviously like, you can play them, and they are technically on a technical basis they are failed breakdowns. And I have played them sometimes in the past, but they do get a little tricky. I mean, with that one especially because we had one low at 56.25 to be exact, and we had another at 56.75. We got down to 55.75. So it's like it's tough. It's like a half a point to three-fourths of a point,
yeah,
and it's also because we had that shelf at 65 too, right? When you have two structures like that, oftentimes I think even Adam says that he likes waiting for the higher one to clear because it's just a little safer, especially if they're close together. Here, you could argue you could have gotten a trim here. For me, it happens so fast in real time. Just touching 56 and bouncing right off of it into 65 that there really wasn't anything I liked there for an entry. And so I was just like, I'm gonna wait for 65. And 65 cleared with ease too. So I
yeah,
guess sellers were just I don't know what sellers were doing today. They wanted to provide no resistance on
yeah. I
either
don't
one of
know.
those
Let's
two.
see. I haven't really looked at the delta on this one, but it's up pretty high on the day, but just kind of curious what happened down here. Oh yeah. So I've just flicked it onto the range chart, the where I'm showing the delta volume. But man, had I been stalking this, so this right here is the sweep of 65, and then on the next candle, the 5 range chart here, where we go from the 56 to 60, that has a huge burst of positive delta on it. So that's a pretty nice signal. Had I been alert and aware to it, but compare that to the delta that's come in on kind of the rest of the session. That is the standout bar there, um, for anyone who likes to watch that stuff. Okay, so I think that's the key points from the trade, but maybe just to sum up, I mean, compare today's session with yesterday's. The volatility that comes in makes things so much easier. Lots of different options, and you can see that with this chart here showing these kind of scary flushes down. And when one of those breaks a level, that's when to start stalking an entry, using waiting for acceptance and the reclaim. But with that, I think that's wrapped up a good week one to the year. Hope this has been helpful. If there's anything you'd like to see more of from us, less of, or talk about different things, put it down in the comments or in the Discord. And we'll just try. The aim of these videos is really just to provide as much value as we can to everyone, and with the aim of kind of growing and learning together and sharpening our edge and improving our execution. So whatever we can do to help, throw those ideas down, and we'll do what we can. Otherwise, that's a wrap, I think. won't be any trades from either of us. Well, I'm speaking for you, but I'm pretty sure there won't be any trades from you for the rest of the day.
No,
We'll wait till
I mean,
see what's.
unless we see another 50, 60 point flush here this afternoon off some headlines, but
Yeah, we'll see.
seems like we're clearing 7,000 here. So
Hmm.
yes, has put in a nice failed breakdown, and again, that's what you want to see, right? Anytime you see a nice clear textbook failed breakdown like we had at 69.65 a couple hours ago, that essentially means the buy programs are turned on.
Yeah.
So you would like to see some good follow through, and you expect all dips to be bought until that failed breakdown is invalidated. So that's just how I like to think of it.
Nice. With that, I'm going to go and finish up my logging and journaling. Hope everyone's doing the same, keeping on top of that stuff. And yeah, we'll catch you next time. Thanks, everyone. Bye.